Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Thanks for listening. I'm Rob Black. February 3rd, 2026. Markets are doing market things. Let's talk about it. Stocks turned lower as earnings flood in. Still have a long way to go in earnings season, but we're starting to get the gist. What's going to move the markets after earnings? Because earnings aren't the problem. Palantir is rallying today after a bumper quarter fueled by U.S. defense spending. Palantir shares are up 4%. They had to apologize for the work that they do with ICE. Interesting. There's a quick question for you, and anyone can drop me an email. How much do you want to support a company that doesn't align with your social values? Whether it's Philip Morris with cigarettes or Palantir with ICE. Boeing with missiles. Facebook with getting teens all messed up images about their bodies. Big questions. I don't know if I have the answers for you. Today we see the NASDAQ down 304, down 1.2%. Rotation out of tech. The Dow Jones Industrial Average hit an all-time high, sitting at 49,374. The S&P 500 is giving back today, down 64 basis points. That's 0.6%. The Russell 2000 is gaining. I guess it's the bright spot of the day. Bitcoin down $2,000 to 76,860. I've got something on Bitcoin later in the show. 10-year Treasury sits at 4.29%. Again, wise investors, the wise investor. I used to do a radio show right next to a guy, and he didn't like me. He was called the wise investor, and he would go, "I'm the wise investor." Kind of had a southern drawl to him. Strangely, after I moved to the West Coast in the 1990s, I learned that he had fallen down a flight of stairs at his house and died in a freak accident. Bizarre, no? How we all pass at some point. I hope I don't go in my own home, especially with my wife standing behind me, pushing me down the stairs, you know? That's not what happened with him, but it could happen with me. One of the reasons Bitcoin might be lower is the White House is failing to resolve the U.S. crypto legislation stalemate. U.S. home builders are working on a plan to develop as many as 1 million Trump homes. Bob Iger is leaving both gifts and burdens for the next CEO of Disney. Success or failure starts at the top. Disney says Parks chief Josh D'Amaro will succeed Iger as CEO. 57 years old man, good looking man, holy mackerel. He's being pushed around all the CNBCs and Bloombergs right now. And let's just say, very rarely do I have a man crush, but this would be a man crush. And I'm happily married. So no thoughts there, please. Let's take a look at commodities. Gold is sitting at just under 5,000, up 332 today, up 7.14%. Bitcoin's up 11, back up to $88 an ounce, up 15% today. Copper's up 1/4, so it sits up 4.4%. Natural gas is higher. Brent crude is higher. All 5 major commodities that I report on higher. That's going to be inflationary to you and to me. So today we're seeing a broader market. Some of it was higher. Weakness in tech is pressuring the major averages. You're seeing a rebound in precious metals and oil prices. Mixed reaction to earnings. Weakness in mega cap tech stocks. Some AI plays like Palantir up 4.7%. Teradyne up 12, almost 13%. But there's no doubt there's that rotation out of big cap tech. PayPal is down 18.4%. They're one of the worst performing S&P 500 names today with a double miss on earnings and revenue. They have a cautious 2026 outlook. The CEO, Chris Present, fired. That's a bit of a shock. How often have we seen CEOs fired in the last 10 years? Not often. Pepsi's higher, up 5% today. Merck's higher, 3%. Consumer staples are doing well. Utilities and healthcare, solid gains amidst weakness in other growth stocks. You would call that a defensive play or a risk-off play, in my opinion. Disney's up 1% on that news of their Josh D'Amaro being new CEO, effective at the annual meeting coming up on March 18th. Current CEO Bob Iger will serve as a senior advisor and member of the board until his retirement on December 31 of this year. Merck posted better than expected fourth quarter results, but issued disappointing 2026 guidance. Pfizer down 4% after its earnings report an update that its ultra long-lasting injectable GLP-1 met the primary endpoint in its phase 2B trial. There's still a good bit of time and testing left to get its approval stage because it's only in phase 2. You still have to go through the phase 3 trials. Think of it this way. Drug companies have 3 phases in their drug trials. The first phase is testing on animals and basically making sure that the formulations of chemicals, minerals, and all the stuff that they put together into these pharmaceuticals, they work well together. Now, again, many of these recipes have been around for almost 100 plus years, so it's not as if the ingredients are the problem sometimes, but the formulations and the refinement of the ingredients per se. So that's the early on. Later you get into humans, and then you have to, that's phase 3. So I would say Novo Nordisk is in a good position right now because they have a pill form of a GLP versus a shot that Eli Lilly and Novo Nordisk both enjoy as well. Can we say we enjoy a shot? Or is that just me being creeping on my own weirdness? Year to date, crude oil's up 2%. Nope, I'm sorry. 9.3%. Silver's up 13%. Gold's up 8%. This is all before today. Morgan Stanley Country Index All World's up 2.6%. Remember that number because the Nasdaq's up 1.5%. The S&P 500's up 1.1%. So the Morgan Stanley Country Index All World is doubling the S&P 500 and almost doubling the Nasdaq. The Russell 2000, on the other hand, small cap American names that have only domestic exposure. And in the past few years, they tried to go more international with some small caps, but it didn't yield the results and it wasn't as profitable. So the Russell 2000's up 5.2%. So recapping a little bit of yesterday's news, Friday's job report's going to get pushed due to the delay in the government shutdown. SpaceX is acquiring XAI. I'm fascinated to see how a $1.5 trillion market valuation is going to play with bad news sometimes and good news. Elon Musk is trying to put a rocket on Mars, a colony on Mars. And when those missions fail, they fail pretty spectacularly. For the record, NASA's sending people back around the moon, deepest trip into space ever for astronauts, I believe. The same week that the Olympics and the Super Bowl are on. Talking about picking your time to have good PR or even to be noticed, not a great time for NASA. President Trump announced the news he had reached a deal with India. It seems like he didn't want to be outdone by what India is doing with European countries and Canada. If you do not see a reason to invest in India right now in an ETF, you're missing it. They are having their moment on the world stage. So Palantir beat earnings expectations on rising spending in AI data tools from businesses and government agencies. This is the fastest growing, most lucrative software and consulting company. Very high margins. Software that sells itself. Do you want to own software names like Salesforce and ServiceNow? I don't know. More on that later in this show. Teradyne up 15 to 20%. The maker of test and semiconductors and robotics reported better than expected results. SanDisk rose 4%. Closed at a record high yesterday. Record high the day before. Record high the day before. Record high the day before. It's an AI infrastructure trade. Shares are up 180% year to date. It's only February 3rd. Alphabet's price target was taken up to $400 by Mizuho from 365. They kept their buy rating. Constructive on fundamentals and large cap advertisers. Forecasting the market will accelerate in 2026. Waymo, the autonomous driving business from Alphabet, announced a $16 billion raise and a $126 billion valuation yesterday. Alphabet's going to contribute $13 billion to the financing round for Waymo. Alphabet/Google reports earnings tomorrow after the market closes. Who's going to build those AI data centers? Well, GE Vernova is going to have a big part in it. Mizuho raised their price target on GE Vernova to $714 from $660. Gas turbine capacity expansion. Didn't think I'd be saying that on air anytime soon. Morgan Stanley resumed coverage on Walt Disney with an overweight and price target of $135. Their overweight rating on Disney is anchored by the view of double-digit adjusted earnings per share growth in 2026 and beyond. What Bob Iger is leaving to the new CEO is way different than what he left Bob Chapek. Bob Iger stepped down originally in 2020 in February, and then March, COVID hit. The parks got shut down. Movies got stammered or stunted. Some of them were moved from theatrical releases to Disney Plus. Disney Plus suddenly became the big, come on, you got to save Disney right now because the parks and movies were basically shut down. Bob Chapek didn't know anything about Disney Plus, and he was asked to basically make that the main feature of the company. Talking about bad timing. Microsoft was assumed with an overweight, named the top pick at Piper Sandler with a $600 price target. BNP Paribas, they downgraded ExxonMobil to underperform from neutral. Nothing is wrong with the results, is what they noted. Nothing is wrong from their perspective with the business, which continues to perform robustly and is well positioned relative to peers for long-term growth. Yet, after a year of very strong absolute and relative performance, augmented by a 16% absolute rise since the start of 2026, they're saying the valuation's high. Energy has been something that I've been talking about for the last 2-3 months now, as it's the next one to move in commodities, and it has moved. Now, is it moving as much as silver? No. Is it moving as much as gold? No. But the companies like Exxon, you would have to look for a silver miner to make money off the high price of silver. You're looking for the Exxon Mobils to make money off of oil. Not as easily made in oil as it is in silver and gold. Pfizer fabricates pharmaceuticals. That's a lot of pff. Pfizer fabricated pharmaceuticals. Earnings came in at 66 cents a share. Expectations were for 57 cents. They beat on that. Revenue came in at $17.6 billion compared to $16.8 billion by the street. Company released mid-stage trial results for its monthly weight loss shot, which it recently acquired through its purchase of Metsera. Patients lost over 12.3% of their body weight at 28 weeks. Pfizer won a bidding war against Novo Nordisk, purchasing Metsera for $10 billion. The amount of weight loss is in line with products already on the market. It's the first sign that less frequent dosing could produce similar results. Pfizer's working to reignite growth after demand for its COVID-19 products waned, and some of its biggest moneymakers get near to the end of their patent's life. I almost said patient's life. Uh-oh. Coming up, I'm going to be talking about Anthropic, Walmart, PayPal, and Bitcoin. I've got some of the big tech stories from yesterday in my third segment, in case you missed those. Some of the big themes going on in tech. Pints and Portfolio coming up this Saturday, February 7th, 12 to 2, Pleasant Hill. I'll go over stocks I'm buying and selling. Not selling much, but I am buying. Sip, socialize, and get your financial questions answered at the Pints and Portfolio. I'll buy the beers. Complimentary portfolio review. Complimentary preliminary financial plan after the event, because if there's alcohol involved, it's not a good idea to be taking or giving financial advice. We'll talk diversification, risk considerations. We'll talk about you. It's a chance for you to get to know me. It's a chance for me to get to know you. I'll bring a couple financial planners, Travis McEuen, Nathan Rogers. You can sign up for the event at robblackshow.com. That's robblackshow.com. Sign up today. I need some butts in the seats, if you know what I'm saying. Pints and Portfolio, Pleasant Hill, California, 12 to 2, February 7th. That's this Saturday.
Saturday, February 7th. Join Rob Black in Pleasant Hill for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by between noon and 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, February 7th, noon to 2 in Pleasant Hill. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Taking a look at the stock market as the morning goes on. The S&P 500 is further lower, down 0.75%, down 53 points to 69.23. I'm okay with this. There's a lot of work that needs to be done around big numbers. Not necessarily my work, but work nonetheless. The Dow Jones Industrial Average is down 119, down 0.25%. It's gone negative for the day. The Nasdaq's down 1.3%. Russell 2000's flatline, so it's gone negative after a strong start to the day. Walmart joins the $1 trillion club as technology frugal shoppers are fueling the surge. I believe that is going to be similar for Costco and in the long run, Target as well. But man, Target's got a lot of DEI problems, a lot of public perception problems, inventory problems. If you've gone into a Target, and I've been in one in the last year, and it was just a mess. And it felt like maybe a football game or a rugby match trying to get around the store. I did not enjoy that experience in any way, shape, and or form. Let's talk about some of the other stories out there. Walmart, given a little bit more color here, is its inclusion in a group of heavy tech names illustrates much of its ambitions. Walmart has tried to grow profits faster than sales in recent years by leaning into third-party marketplace and advertising businesses, both of which bring higher margins than traditional brick-and-mortar operations. The boom in its online selling platform, followed by the path of key rival Amazon and Walmart, put out the clearest signal yet of its tech ambitions when it listed on the tech-heavy NASDAQ 100 last month. Fascinating to think about. Walmart said revenue rose 5.8% in the quarter, boosted by a 27% jump in e-commerce, 27% jump in e-commerce sales, and 53% growth for its advertising business. I would buy Walmart for my children. At this point in time, I have enough invested. I'm going to say that more and more. On occasion, I might do a trade for myself. But now I am starting to do the long-term growth investor thing that I've done with you for 20 years, 25 years. I'm doing it with my kids and their portfolios. PayPal names HP's Lorries as CEO after they missed earnings expectations. He served as HP's CEO since 2019 on Lorries. He's replacing Alex Chris with the current HP CEO. That's a pretty interesting move from one company to the next. Success or failure starts at the top. Disney adults are having a big say in who will be named the company's new CEO. Josh DeMero is the favorite, and he won the two-term chief Bob Iger's decision. A lot of people thought it was going to go to someone else, but in the last few weeks, the betting market got it. I have a big question for you. What do we think about the betting market, things like Kalshi, in the future? Is it even worth watching the Academy Awards when we may already know the winners, if that technology gets better and faster and more tight? Sports operating income was down 23%. Non-streaming entertainment revenue for Disney crashed 55%. They had a big standoff with YouTube TV that Disney says cost $110 million in revenue on Monday Night Footballs, for instance, as they had to make right with advertisers. Bernstein is saying that Bitcoin could bottom out at $60,000. But this is the interesting part. It says it's expects the most consequential cycle after that. So this is not a bull market correction or a dip. It's a full bore 2022-like. Bitcoin has steadied, holding above 78,000 following the weekend-long bloodbath. It's still down more than 10% in the past week. Bernstein analyst Gautam Chkangi wrote that we may still be in a short-term crypto bear cycle, but he anticipates a reversal most likely in the first half of 2026. He thinks Bitcoin will bottom out in the high 60,000 range, so 65 to 66, 67, 68,000. He expects the reversal to be swift and setting a new solid higher base for what could be the most consequential cycle for Bitcoin and potentially lay the foundation for the Bitcoin sovereign cycle. Interesting. A lot of commentary on this. Bitwise CIO Matt Hugin, he wrote a note yesterday that says this is not a bull market correction or a dip. It's a full bore 2022 like Leonardo DiCaprio in the Revenant-style crypto winter, set into motion by factors ranging from excess leverage to widespread profit-taking by the OGs, the originals. Bitnix analysts view the current $80,000 level as a critical structural resistance that would signal a return of risk capital. On the downside, 75,000 represents a key support zone. A lot of commentary on Bitcoin, in my opinion. And the dollar, the weakening dollar. If Benjamin Franklin were around today, he'd probably be battling self-worth issues. The value of his bills with his face on them are plummeting. The dollar has sunk 2% against a basket of foreign currencies since the start of 2026. There's a lot of geopolitical tension, like Trump's recent spat with European allies over the Greenland annexation. There's sheepishness, if you will, about America's future role in global finance. Other countries are getting on and making deals with each other and leaving America going like, hey, I thought we were telling you what deals you were going to want. You're not supposed to have your own opinion on this, and they have their own opinion. That's going to be one of the unintended consequences, I believe, is with the Trump administration. When you are tough on your allies, they tend to remember that. And if they can go elsewhere to do business, they might. 2021 Fed let the economy run hot. The 2026 Fed is expected to do the same thing in the second half of the year. Now, the 2021 Fed let the economy run hot, and that created a lot of inflation. A lot of people are thinking we may have inflation again in 2027. Back half of 2026 in the stock market will be tough, maybe, because it'll look at inflation in 2027 based on the cutting of interest rates. A lot going on. You can always find me online at robblackshow.com. I'll do a big event. Do a big talk about Anthropic later this afternoon. I was going to get to it this morning. I simply ran out of time. This is something you don't want to miss in the afternoon podcast. I'm still doing 2 podcasts a day right now. I'm putting them both on the same channel as I'm working to get the second podcast, the afternoon one, New Focus on Wealth, put back onto Google's YouTube Music. Hey, this is a great chance for you, though, to go sign up for a Pints and Portfolio. I need your help. Pleasant Hill, California, this Saturday, 12 to 2. I'll buy the beers. We'll answer your financial questions. I'll bring a CFP with me, enjoy a beer, connect with like-minded investors, get a complimentary portfolio review, as well as a preliminary financial plan. How are you doing? Are you only in tech stocks? What's your year look like? I'm Rob Black, talking all things financial. Coming up, one more tech-heavy segment.
Saturday, February 7th, join Rob Black in Pleasant Hill for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500,000 or more in investable assets. Drop by Saturday from noon to 2 p.m. in Pleasant Hill for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or are already there, this financial snapshot can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide you all the details on the location of the event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Saturday, February 7th in Pleasant Hill, noon to 2 p.m.
Let's take a look at Tom Lee, some tech stocks, some big themes, and much, much more this segment. Tom Lee has been persistently bullish on the U.S. stock market for as long as I've followed him. Despite environments like 2011, 2018, 2022, he seems to say what can go right versus what can go wrong, but he does give us a list of what can go wrong. And I'm going to give you a list of what he thinks can go right and what can go wrong in 2026. His research emphasizes demographics, credit availability, earnings growth, and innovations to make those calls. He's been on the right side of what we should be focusing on and probably will be for the foreseeable future. When he shows up on CNBC, his hair is beautifully coiffed. But I've actually seen him at some investor conferences where he's kind of got the holy mackerel. He just got off of a plane that was a 14-hour flight and had massive turbulence for 13 of those hours.
Oh, my.
Tom Lee, let's talk about the tailwinds. Let's talk about the positives first. And you should have a list like this taped on your wall. I do. I use painter's tape so as to not peel the tape off my walls, but I'm not a big post-it kind of guy. My lists tend to come from lists that I put on paper and that I tape to the wall, so I have to look at them until I remove them. Why? So his tailwinds. Economic growth is accelerating as headwinds of tariffs, inflation, and war are ending. He also sees a tailwind of the S&P 500 earnings per share growth set to accelerate, supporting expansion of multiples. He sees a dovish Fed who is no longer fighting the Fed, especially in the back half of 2026 after Jerome Powell goes bye. Do we have to see another NSYNC or Backstreet Boys commercial in the Super Bowl? God, no. Please, no.
That's terrible.
It is terrible. Some of the more of the tailwinds that he's looking for, he sees a phrase that should pay, like bull markets don't die of old age. The ISM manufacturing index has been below 50 for nearly 3 straight years, and moving above 50 is a sign of strengthening equity markets. He sees the rule of the first 5 days as a positive sign for a long and reliable history going back to, we got the first 5 days of this year positive. Some other tailwinds that he sees as positive for the stock market include still greater than $7 trillion in cash on the sidelines. He sees additional cash that could generate and move into equities from venture capital, private equity, and private credit. So those are 1, 2, 3, 4, 5, 6, 7, 8 reasons he's positive. Can you come up with another one? Maybe AI is increasing productivity. For 5 straight years in the United States, we've seen productivity gains of more than 2%. That's great for margins. Maybe you could say AI in general is a positive, although I think we're starting to see, maybe it's not 100% positive like it was a year ago. If you were to have 100 flags saying yes, yes, yes a year ago, maybe you have 70 flags saying yes, yes, yes now, and 30 flags going maybe. So some of the headwinds, problems that he sees for 2026 ahead, equity market needs to digest 3 years of 15% or greater gains back to back to back. He thinks AI is the juggernaut and investors are wary on good news being priced in. There is some truth to that, huh? He sees, and let me put that in his words, AI has done so well. We've expected it to do well. And then the reality. It's like, I hate saying this to you. 1 out of 4 parents. No. Parents, 1 out of 4 kids don't turn out the way you want them to. Wow. Did I just drop a bomb on you or what? Same thing is done with the AI stocks. They look great, but some of them aren't going to work out.
Whoa.
And there's a lot of good news priced into these babies. Next up, let's talk low-grade consumer stress in the subprime and auto loans. What's that all about? It's a headwind, low-grade consumer stress. Okay. You and I were not all that freaked out And we should be more freaked out on subprime and auto loans that are going delinquent. Low-grade private credit stress. I own private credit, and I'm like singing and happy and ebullient. Part of working with a financial planner is you do get access to private equity, private credit, private real estate. You do get exposure to long short funds. You do get exposure to tax efficiency, tax management, how to blend your taxes with your investments so that when you're in that age of retirement, which is not as golden as the age of Aquarius, but it's pretty golden nonetheless, that you do things intelligently. So he sees private credit as a problem. I'm looking at it as I'm getting I'm getting 10% to 12% income. But clearly that has to be exponentially greater risk than cash giving me 3.5%. Another risk or headwind he sees to the 2026 stock market is New York Stock Exchange margin debt is at all-time highs. You know, you can take out margin, which is credit. If you own $100 of stock, you can take out $15 of, well, wait, you don't have to have $115. You only have to have $100? And you can now suddenly take out a loan on your stocks? Yeah. I did it in the early 1990s, and I just saw too many people get margin calls when the market gets volatile. I've sworn it off, much like I've sworn off hard liquor. I got to be careful when I say fast cars. I was going to use the term loose with women, but I am not going to do that.
Behave yourself.
How about we say high maintenance partners? Sworn them all off. So NYSE margin debt at all-time highs. Valuations are higher than April 2025 when current bull market was born. Low-grade private credit stress, low-grade consumer stress in subprime and auto loans. AI is the juggernaut that all the good news is already priced in. Maybe. He also says a big risk for the year of 2026 is midterm years tend to be back-ended. Investors seeking mean reversion opportunities such as emerging markets and commodities. I've done well with my emerging markets, my international markets, my small cap and my mid cap in the last 5 months, 6 months. Really well, better than I did with my Magnificent Seven stocks. He sees another headwind as this is something I've been talking about for a few weeks. That the OpenAI and SpaceX, as well as Anthropic, IPOs might suck out all the oxygen of equity demand. I'm looking for stocks to buy right now, and I've got a good list. Let's say I'd buy Microsoft, I'd buy Apple, I'd buy Amazon. I'd buy all those stocks when they're 20 to 40% off their all-time highs. Do you see where I'm going at with this? What else would I buy? I bought Caterpillar for some income. What else would I buy? A lot of what I buy now is for my children because you know what? I believe the children are our future. So my thought there is if I'm going to be buying growth or hyper growth, I'm going to put it in my kids' account. For me, I'm going to probably be buying growth and income or income stocks. So those are the headwinds and tailwinds. Let me give you them again. The tailwinds, things that mean we're going to do well in the U.S. economy and stock market. Economic growth is accelerating because tariffs, inflation, and war are ending. S&P 500 earnings per share growth is accelerating. He sees a Fed that's dovish, no longer fighting inflation. He sees bull markets don't die of old age. He sees the manufacturing index and the servicing index that has been below 50 for nearly 3 straight years and is moving above 50 in a sign of strengthening of equity markets. He looks back at the first 5 days of the year being positive in the stock market, being a positive, reliable indicator in history that we're going to have a good year. He still sees over greater than $7 trillion in cash on the sidelines, even more if you start factoring in venture capital, private equity, and private credit. Next up, Amazon.com got a price target today raised to $315 at Citizens JMP from $300. It's currently a $239 stock, so almost $100 upside. It's a pretty big move. He thinks Anthropic increased its internal revenue projections, which bodes well for Amazon Web Services, given it's Anthropic's primary compute partner. Specifically, he said Anthropic now projects at least $17 billion of revenue in 2026, up from $15 billion made earlier last summer. So he sees good things for Anthropic equaling good things for Amazon. Good. I own shares of Amazon. It was my top pick for this year. After last year, my top pick did quite well with Alphabet. Apple has guided above consensus 2026 second quarter growth and margin expansion as iPhone demand stays strong. AI Siri is seen as the next catalyst, according to Bernstein, who's done a pretty good job over the years with tech stocks. They see a $325 price target, not too shabby for a $260 stock. Despite headwinds from memory price hikes and potential shortages, revenue guided to grow at 13 to 16% year over year. Sweet, that is a big number. Of note, I saw a mock-up, and this is totally fake, but there's now conversation starts on Apple. Will they come up with a flip phone? Wait. We already know that they got a foldable phone coming, but a flip phone? Wow. And the idea of a screen that you open up and it's the size of like compact makeup case, and it's more handheld. It doesn't look like a gun in your hand because the phone isn't extending past your palm. It's just in your palm. If you know that reference, congratulations to you. But it's a little 3x3 square, maybe a 4x4 square when it's all folded as a flip. That's kind of attractive. And it might go well into turning into AI commands, kind of a walkie-talkie size versus a phone size, a very, very small 4x4 square or 3x3. So another two new entire ecosystem of Apple foldable devices are going to come out in the next year to 2 years. You can always find me online at robblackshow.com. Sign up today for the Pleasant Hill Saturday, February 7th, 12 to 2. Pints and Portfolio, where I'll buy you a beer. We'll talk financial planning at robblackshow.com. That's robblackshow.com.
Saturday, February 7th, join Rob Black in Pleasant Hill for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by between noon and 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, February 7th, noon to 2 in Pleasant Hill. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this event in Pleasant Hill and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.